Well, it's been a weak handover from Wall Street, and that's something that we can see in the Asian indices as well.
A quick recap, Infosys was a strong Q2. Beat on revenues, beat on margins, record high deal wins. For HCL Tech, mixed Q2.
That tomato-led spike now looks like a clear one-off.
Coming first on United Breweries, Citi has downgraded the stock to sell now from buy.
The bell has rung. The first tick on the Nifty is down.
The global markets are also holding on fairly well.
Services within services, it's a pretty strong growth.
The government has gone ahead and upgraded their status to a Navratna status.
I mean, we were at 530 versus RBI's 5%.
Markets look a bit off.
No, and largely led by IT, right, today?
Well, Zagan has entered into growth agreement with Visa.
Overall, if you look at it, as you rightly said, there is a dip in the deal's values.
Some 6,000 munitions have been fired in the past 6 days.
13 round of trade talks between India and UK are ongoing right now.
Markets, the headline index, of course, is in the red today.
Good afternoon. Welcome to Closing Bell, the last 1 hour of the week of the day of the trading week. And the first tick was deeply in the red, down 140 points. And now it looks like the final tick could just be in the green. The Nifty and the Sensex have erased all their morning losses. Now back in the green for the Nifty, up 5 points. Sensex is still showing you a bit of a cut, so that's down close to about 0.2%. But look at that intraday pullback on the Nifty Bank. The Nifty Bank, has seen a very sharp recovery from the day's low, led by names like an ICICI Bank, even an HDFC Bank. These stocks are recovering. That said, IT continues to flounder, down close to about 0.6%. Hi.
Well, buy the dip works again, right? And that was the call earlier this morning. You believe this market is in an uptrend. We're going to be starting closer to around 19,650, which we started out there. You buy the dip if you believe so. Keep a stop loss of around 50 points out and you'll make some money. And that was the call that we made this morning as well. Just take a look at the Nifty. And if you pull up a split screen between the Nifty and the Nifty IT index. Now, the Nifty has recovered a goodish bit. We have moved well into the green. The IT index, well, the losses are not as much as what maybe some expected. So it's down close to around 0.6%. But what's really helped today has been the recovery we have seen in the last 60 minutes on the Nifty Bank. And that perfectly correlates with the Nifty itself. So the Nifty, just take a look at the chart. Now we'll get the Nifty Bank. Whoopsie, just lovely one was what we're seeing out there. Big spike up on the Nifty Bank. And two big stocks that we were highlighting earlier today, and they were struggling in the first half of trade. You pull up a split screen of Reliance Industries as well as HDFC Bank. Both of them, they have been coming to life, particularly in the last hour of trade, last 2 hours of trade or so. All through this week, I think for the last 3 sessions or so. And even today, they're not up a couple of percent points or what, but they've recovered a goodish bit. HDFC Bank is now on its way to move into the green, and Reliance Industries as well. And we're highlighting both these two stocks because that's more than 24% on the Nifty itself. The next stop for the Nifty, 19,850. Just a few sessions ago, we went out there and we saw a U-turn from there. So the buy the dip did work today. So it'll be pretty good going, right?
Well, it's working for now, and it seems that, let's see, 1 more hour to go if the Bulls decide to get into shape and form, ready for the weekend and the big fight ahead, right? Forget the Bulls and Bears on the last street. We're talking about the bigger fight on Saturday, right? And that's what everybody is getting really geared up for. Are you in Ahmedabad?
No, I'm going to be, but I'm so excited. I'm not going to be there. Manglam's going to be there representing all of us as well. Manish as well as Anuj. So
I think we have a decent contingent.
We've got a good contingent there.
Yeah, not bad. Keeping the CNBC-TV18 flag flying high. All right, just a quick word on the global picture as well today. While we get set for our weekend, a lot of action on the U.S. Markets on Wall Street is going to be focused on the big banks, and that's the next thing to watch. There is caution in global markets. We can't take away from that. So if you're seeing Europe right now, there's a shade of red out there. Most of the Asian markets have actually closed pretty negative. Hong Kong was down about 2%. And Europe is extending some of that caution as we go forward. That's what I'm talking about. Futures on Wall Street, absolutely flat. As I said, it's you've moved beyond inflation. Now you're looking at numbers and big ones. Wells Fargo, Citi, JP Morgan, all these guys are reporting this evening. Just a word on mid-caps here. The advance decline ratio has been pretty much even, Steven, today. It's still favoring advancing stocks. But there is no euphoria or, over-exuberance in the mid-cap market. A couple of themes that are working in mid-caps are continuing from yesterday, and PSUs is that one theme that I'm talking about. Today morning, we woke up to additional news of a couple of these railway companies getting a Navratna status. So some of those stocks have been doing very well. You've got IRCON, RITES, all of them are up and about, and SJVN is working well. MMTC, Nigel was, of course, cautioning us about some of the fundamentals that surround that stock, but again, there's no stopping, 8-9% higher there as well. So let's see how that goes. And asset managers, by the way, the reaction on HDFC AMC's numbers was a little delayed. We didn't get that yesterday to this extent, but now that the brokerage notes have come in, good run-up on HDFC AMC and even Nippon Life. Nippon Life was up even yesterday. So these are two trends, PSUs and asset managers. They're continuing from last afternoon. So let's get started and talk about how we can look at positions and trades now for the last 1 hour. Our guests are joining in. We have Mitesh with us. Mitesh, good afternoon and happy Friday to you. Last hour to go. What are your trades and what do you make of this pullback that we're seeing on the Nifty?
Good afternoon, Sobi. Indeed, it's been a happy Friday, I think. In the morning, I wouldn't have bet any money on the markets turning into green. And there we are, Nifty is right positive. It's just recovered the entire loss which happened with the Infosys gap down. So, very, very good session in that sense. What is important to know is that the Nifty has also captured this 19,700, 720 range again. And in the last 2 days, on the hourly charts, we saw multiple highs around the 19,830 mark. So I think that's the next target which I'm looking at. Once we start getting past 19,830, good chance that we'll make an attempt towards 20,000 soon. So we'll approach the market with slightly long bias. I have 2 buy calls right now. Disclaimer, both of them are, we have some vested interest into. So DMart is giving some kind of a breakout. It's a part of my portfolio. So I clearly have vested interest over here. That's a buy with a stop at 38.75 for targets of 4,080 for me. And Bharat Forge is something which we have recommended to our clients. So that's a buy with a stop at about 11.05 for targets of 11.60.
DMart reports numbers tomorrow. They've already given a Q2 update where they're guiding for a standalone revenue growth of about 18.5% on a year-on-year basis and about 6.2% on a quarter-on-quarter basis. And the stock has done pretty well since its Q2 update. It's rallied close to about 8%. But, the proof is in the pudding, and we'll know that tomorrow. But let's talk about banks. Banks are seeing this solid intraday recovery. That said, on a week-to-date basis, weekly basis, banks are still underperforming. Abhishek is joining in for an overall roundup of what's been the trend, the driving factors. Abhishek.
Well, Nifty Bank has underperformed, overall Nifty. So Nifty Bank has declined on a weekly basis, while Nifty has actually gained or seen upward of 0.5% on a weekly basis. Now, analysts have turned cautious. Analysts are becoming cautious with respect to banking sector, particularly regarding the net interest margins and the return ratios, that is ROA and ROE, going ahead. So this cautious may be related to the challenges and uncertainties that they are seeing in this sector. So for instance, UBS Securities has raised certain concerns. They have expressed concerns on the credit cost in FY25 for banks, especially coming in from the unsecured retail portfolio. They suggest that, increasing default risk in retail unsecured lending could lead to higher credit losses or higher credit costs for the banking sector, potentially ranging anywhere between 50 basis point to 200 basis point. So they say that the unsecured retail loan growth is at a CAGR or cumulative annualized growth rate of about 27% between FY18 to FY23 and accounts for 8 to 12% of banks under coverage. That is 8 to 12% of the overall banks that are under their coverage as of Q1 FY24. They believe that the risk of default is rising as the share of lending to already overdue borrowers has increased substantially from being at 12% in FY19 to right now about 23% as of FY23. So UBS recommendations, if you take a look, they have downgraded their rating on State Bank of India from buy to sell, and they have also lowered the target price on SBI to about 530 from the earlier target price of 740. They have also downgraded Axis Bank from buy to neutral, and they have reduced their target price to about 1100 per share from the earlier target price of 1150. In another news, you have a Bank of Baroda which has been under major underperformer this week. It has declined by 5% this week. So that is back on certain news that, attributed to RBI's decision to, barring new customers from being onboarded on the digital platform, that is the Bob World, which has put pressure on the bank stock price as well. So RBI's action on digital platform of banks, if you take a look, they have taken regulatory action against banks' digital platforms over the last few years. So this is the second instance of a bank, being under RBI's radar after RBI had actually banned onboarding of new customers for SDFC Bank. So SDFC Bank actually took 15 months to receive approval from RBI to onboard new customers on their digital platform. In another news, Paytm's regulatory issue actually has increased. So Paytm Payment Bank has faced regulatory issues with RBI imposing a fine of about 5.5 crore, that is rupees 5.39 crore on the bank due to deficiencies that they have seen in the regulatory compliance. However, Paytm's stock price has seen positive performance so far, rising by about 1.3% on a weekly basis, about 9.5% on a month-on-month basis, and year to date, or YOY basis, perhaps they are up 77%. Back to you.
Okay, got that. Thank you very much, Abhishek, for some of those details there. Lots of interesting data points there on financials and banks as well. Well, we have Prakash Diwan joining us this afternoon. Prakash, great to have you on the show as always. Let me start with actually first Paytm. I mean, Paytm's had an interesting journey, interesting ride, and stock moved higher as well. Latest news comes in from this RBI penalty. But what are your thoughts on Paytm?
Good afternoon, Surbhi. So I think this is course correction at its best. Whatever took Paytm down post the IPO, it's all getting reversed, and the news flow is telling you that they are setting a lot of things right. They're exploring, growing the optionality and the adjacencies in the business apart from the mainstream payment mechanism, payment transfer platforms. And interestingly, I keep on saying Paytm will get re-rated once people start seeing some proof of ONDC reaching critical scale. Now, ONDC is something which is still very early. The adaptation might take time. It's very broad-based, more bottom of the pyramid. But as it kind of takes some sort of shape, the overlap for the business opportunity for Paytm on the ONDC onslaught is going to be simply very, very impressive. So there will be a re-rating, but these opportunities of whatever these RBI penalties or some sort of a rap on the knuckles is always a good opportunity to buy into stocks when they temporarily get into a little bit of a negative sentiment. But otherwise, I think the long-term trajectory is very promising.
Okay, so you're optimistic on Paytm. Prakash, just quickly, since we're on financials, have to ask you about what you thought of this UBS report. They've suddenly turned so cautious, they've downgraded so many banks, and the call on SBI was particularly interesting, right? Big price cut, and they're saying that this NIM compression is going to be pretty real. Despite the valuations, I mean, SBI is probably, trading at some of the best, most comfortable valuations in the PSU banking pack.
Absolutely, Surbhi. So, I remember discussing with you specifically in one of the shows when something similar happened to L&T. Of course, it's a different company, different sector. But there were expectations after Q1 numbers that things, maybe I think it was last quarter of the last financial year, where things look very bad and, it could kind of get derated and downgraded and all of that. And that did impact L&T temporarily, the price, but it went all the way to 2100, close to that, and then it's kind of done fantastically well after that. So this is what actually happens when you anticipate some change to impact a bit too much. Now, SBI, given its scale, given the kind of reach it has, the way digital adaptation is happening in so much of its processes, I don't see any reason why it would get impacted so badly. And all banks, mind you, we have learned enough and more from the previous experiences. So the nature of earnings in India is changing so dramatically for companies, for the borrowers. I don't see any reason why lenders have to get so worried. So there are pockets where you might see some short-term exuberance, some some of the banks going overboard, but then there are enough regulations to prevent a cascading effect. So I think this report is just a good, nice piece of caution, but it's not going to impact banks the way it anticipates, especially in the near term for sure.
This tie-up between Zaggle and Visa, any thoughts on that, Prakash? What's the kind of opportunity it opens up?
It's interesting, but honestly, I've not had the chance to really break that down into numbers or cascade that into the specific numbers or opportunity. But, it's a new business that's kind of trying to bite into quite a big, piece, and which means that if it does successfully manage to do it, you'll probably have a very, very clear shift in terms of where it ends up, growing into. But it's at times I feel it's a bit too early for a small company like this to kind of attempt something very ambitious. So this tie-up could just probably be early days, and then the real scale-up will happen subsequently. So I would wait to see and get a feel of it before making any judgment, especially on allocating money.
Okay, do stay on. Need to get into a very short break on that note. On the other side, we'll also get you more on the market. Stay tuned.
Welcome back. Well, the market's moved into the green, but there is some selling that's creeping in from the high point of the day. Let's see what's putting some pressure, actually. BPCL has moved a little bit lower, so that's one such stock. Hindalco as well was still struggling. And Dr. Reddy's, I think, a few of these names have moved lower. But the one stock that's taken it on the chin, actually, and now recovered is HDFC Life. They reported their numbers. Surabhi Sutaria, she's had a good look at those numbers. She's joining in for a quick analysis. Surabhi, tell us, what was the disappointment in these numbers?
There was a slight margin miss, and that was the disappointment. So the APE number that was known, that was up 7% on a year-on-year basis. The value of new business was up only about 4%, came in at 800 odd crores, and the VNB margin came in at 26.4% versus 27.1% same time last year. And the expectations was that it would be in the 27% range, and that was the disappointment. The solvency was also lower, came in at 194%. The return on embedded value, that was down 50 basis basis points, and it looks like the value of new business was up only in single digits due to the change in the product mix. So the unit-linked products have gained significant market share, significant share in the APE. It has come to 28% versus 21%, and the non-par has gone down significantly. It is now at 28% versus 37%. So the change in product mix has impacted the value of new business and also impacted the margins, and that is what the street was not liking.
Okay, all right. Thanks a lot for that, Surbhi. Prakash Diban is still with us. Prakash, what do you make of this one? HDFC Life, a mild miss, but the stock took a knock. Now it's recovered, though.
So I think, this is exactly what happens when the long-term trajectory is completely clear and distinctly intact, and these short-term vagaries of a number-driven approach will kind of make people exit or buy. We saw Q1 to be far more promising than what it used to be. Q2 probably seems, on a Q-on-Q basis, a little bit of a slowdown. And remember, this is not the best of quarter in any case for these businesses. But going forward and connecting it with the interview that you guys had with the management some time back, where Ms. Vibha Padalkar actually spoke about the change that's happening in the business. While she had cautioned that in the short term, there could be some slowdown in new premium accretion, but the overall value that's getting created, the embedded value, as you call it, in the business, given the nature of products, the participation levels, and the ticket sizes, that is fabulous. So there's no disappointment. Always recommend an approach, a basket approach to insurance, Nigel. You really don't know which player is going to do well in which quarter, which phase of the growth. But if you were to buy into 2 or 3 companies at a stretch, it will always help you and hold you in good stead. So that's my recommendation. HDFC Life definitely needs to be given that kind of significant weightage as well.
Let's move on and talk about the India-UK FTA deal. Where there is a lot of hope riding on that one, the question is, will the deal be done by Diwali? Sources tell CNBC-TV18 that both nations are trying to conclude the talks soon, and a visit by PM Rishi Sunak for signing the deal by the end of October is also being discussed. However, UK government officials say that they have entered the hardest part of the negotiations and refuse to give a timeline. Parikshit joins in with the details. Parikshit.
That's right. There has been talk between India and UK about signing the India-UK FTA by the end of October, and also having Prime Minister Rishi Sunak here in India for signing off the deal. We reached out to both the UK High Commission and the Indian government and the UK Prime Minister's office as well. All of the three refused to comment on whether a deal is likely to be signed soon or whether a visit of Rishi Sunak is being contemplated. But what we can tell you is that a UK delegation, high-level UK delegation, is in India right now for talks. The 13th round of trade talks between India and UK are ongoing right now. What the UK High Commission told CNBC-TV18 is this, that both countries continue to work towards an ambitious trade deal. They cannot comment on live negotiations, and UK will only sign a deal that is fair, balanced and in the best interests of the United Kingdom. The UK Trade Office told CNBC-TV18 that their priority is the deal and not the date, something that they've said earlier also. There is political will on both sides to deliver a comprehensive and ambitious deal. They have closed most of the chapters, but now they are working on the hardest chapters, and these hardest chapters could take the longest period of time. The focus right now of the UK government is to have a consensus on certain complex areas relating to goods, services and investment. So while there is all intention, while there is an effort to conclude this before Diwali, there is also a possibility that this may spill over and take longer because of the complexity in negotiations.
All right, got that. Parikshit, thank you very much for getting us the latest. So that's where we are with respect to the much spoken about India-UK FTA talks. Okay, back to the markets. And there's a bit of a dip on the Nifty, the Bank Nifty specifically, down about 0.5% again. So there's no sustained up move on that index. You're seeing there's selling coming in at higher levels. And it's a rather sharp move that we've seen on the Nifty Bank. Let's pull up some of the constituents. Let's get SBI going, which has been under pressure in any case. HDFC Bank is down a little over 0.5% as well. If you look at ICICI Bank, there also. Now, there we go. Nifty Bank constituents on your screens. A lot of the biggies are still facing pressure. Prakash, let me ask you about some railway stocks, as if they needed any further impetus. Now there's two of them being given the Navratna status. I'm looking at Ircon right now. It's still retaining gains of about 12%. Would you advise buying this or any other railway stock for that matter after this absolutely heady run-up?
Yeah, so I think the re-rating continues and is completely correlated with the conversion of the government's intent to modernize railways, to expand the network, to kind of upgrade in wherever areas you can. And remember, we've just seen the first couple of years by the current government to actually spend a lot of this on capex related to either replacement or upgrades. The expansion phase is likely to continue even for the next 4 or 5 years very easily. So all these companies which were floated by the government through IPOs, which are very minuscule in size, have started kind of making a meaningful presence as the order book goes up. But I only keep cautioning people, don't go by order books in this case, because just to give you an example, Ircon and RITES had order books which are very large even 3 years back. But it's just a conversion that's now kind of made a big difference. And if that is expected to continue, remember there's a little bit of a hump in between, and which is the election phase. Once that clarity on what's the composition of the new government like, then you will probably very clearly be able to see some growth. So keep your faith, but don't be in a hurry right now.
Got it. Prakash, thank you very much for joining in. Let's cut across to Prashant, who's at BSC, and he's in conversation with Samir Arora and Dinshoy Irani.
Hello and welcome. I'm sitting here with two stalwarts of the Indian fund management industry. Before I introduce you, let me just quickly say a quick preamble. Over the last couple of years, the mutual fund industry has seen new investors coming in droves. But as you will soon learn, it's not just new investors who are coming in. There are also newer, actually, but not really new, but newer, older fund managers who are coming back in new avatars. I'm talking about Helios Mutual Fund, which of course will make its debut very, very soon. The NFO will kick off on the 23rd of October. And I have with me sitting down Samir Arora, who's the sponsor of the Helios Mutual Fund. Samir, great to have you with us here. Thank you very much. And Dinshoy Irani is the Chief Investment Officer at Helios Mutual Fund. CEO of
I am not a sponsor. The company is a sponsor. They're not a sponsor.
Got it. Tell us a little bit about the fund. I mean, this is not a new business for you in that sense.
First of all, we are not businessmen. We are fund managers, and this is just one more avenue to, offer the fund management that we have done for so long and quite reasonably well. And when I was in Alliance, I was their first employee, and I was more or less the first employee of any company in this business in '93. So I totally enjoyed that first stint, and I wanted to relive that. And over the last few weeks, I've been traveling all over India. Like this week is my 5th different city: Cochin, Bangalore, Pune, Surat, and today Mumbai. This week, it is too exhilarating, too much fun.
There was an article in Money Control, Samir, which said the OG of fund management. For those who don't know what OG is, original.
No, I didn't know it. I checked what OG means. It means original gangster. Even I didn't know what OG means.
Yeah. But you were the first, in a way, rockstar fund manager. I mean, otherwise, a fund is a fund.
I'm too humble to say rockstar. I accept.
Since you were publicly known, right?
Yeah, it was a good performance, and we became number one in those days in Alliance.
Yeah.
While we were competing with all the big daddies of India with big partners, whereas Alliance was 100% foreign owned in that sense. So yeah, those were great days.
So plans to repeat it?
We hope to relive that whole experience, but who knows how it goes.
A lot of time has passed though, right? I mean, between that and now. And the market has changed, everything has changed. Although returns have been very steady here in India. So that gives you comfort. That gives all of us comfort.
What gives comfort also is our own, that we've also for 18, 20 years been doing India. Dinshoy has been with me since 2005.
Correct.
The rest of our team, the senior guys have all been there from, if not 2005, although one has been CIO. Our head of research has been there from 2007. So basically the whole team has not just coming back after 2005. We've been running other.
Your partnership is what, 2 decades old, right?
Yeah.
And Dinshaw, congratulations. You started with Samir back in the day as an analyst.
Yes.
Covering what sector? And
in 2000, I joined Alliance Capital as an analyst for consumers and pharmaceuticals for emerging Asia.
Right.
But even prior to that, I knew him from '94 because I used to run a boutique research house where I was the head of research, and I used to service him because he was the biggest fund manager in the country at that point in time.
Right.
So.
Right. So what are plans? What are learnings? Because as Samir said, you guys have been active over all these years.
So with this man, one, you can't stop smiling. Okay, he's always smiling and laughing. Because he's a very good person to work with. He does lose his temper, but very less and far in between. So
the market, not about me.
And plus, we keep learning a lot from this change.
Yesterday we were in Surat, and somebody told us that the tagline should be "Haste invest karo."
So that's not a bad tagline.
But so one thing I've learned is that you should never first decide what you want to buy.
Yeah.
You need to first decide what you want to avoid, because purely by doing that you cut out a lot of clutter, and that we've termed it as elimination investing. It's called EI, powered by EI, by the way. That's what we call it.
Not AI.
Not AI. EI. And the concept is very simple. It's you know what is bad, because bad has a definition, good does not. If I tell you a man steals, he is bad. But if I tell you he doesn't steal, doesn't mean that he's good. He may have certain other flaws, right? So when you look at companies and you see these underperformers, you know that this company didn't do well because it was overvalued. It didn't do well because the promoter has not a good background. It didn't do well because the industry theme is not right? So we have these 8 parameters on which we reject stocks, right? And any one single parameter is enough for us to reject. In fact, just to tell you, I mean, we start off with the industry theme and we end with valuation. So valuation comes right at the end. We don't get carried away by a value trap. A stock is cheap because of a reason, right? So that's why we keep valuation at the end. So once you do that, say when we started off in 2005, we put the NSE 500 through this ringer and or funnel or sieve or whatever you want to call it. And at the end, we were left with some 100 stocks. Now, can you imagine the clutter that was taken away from the manager's mind? He now doesn't have to decide whether he wants to buy value or growth.
So the investable universe is for Helios is 100.
No.
Yeah.
That was then. I'm talking
that was
about.
then. Okay.
So any new idea which comes in, any new IPO which comes in, they come through this sieve only.
So one more, just to explain further, is basically we are saying some companies we say will not buy. That might be more or less half the universe. Then you have left with, say, 250, 300 companies right now in our current model, out of which some 100 you will say will not buy now because they are very expensive. So those can change over time, because either the growth rates can change or the valuations can fall, or by not falling or not moving up, they can come in line. Then you're left with about, say, 100, 125 companies where they cannot be rejected on any of these 8 factors. And then we'll search for the good. But first thing is remove any excuse that a stock which can lead to a stock doing badly.
Tell us a little bit about the fund itself, Dinshaw. I mean, what is the strength of the fund? How many research sort of analysts, and just a little bit about the fund itself.
So one thing that we've done is we kept everything separate. It's like Samir's advisory is separate. The alternate part of the business, which is AIF and PMS, we have a separate team for that. Mutual fund obviously will be a separate team. However, what we kept common is the research, because that's where our strength is and that's where we want to focus on. So the research also has a very clear mandate that they cannot have a buy, hold and sell. They have to have 1, 2, 3 rating. 1 is better than 2 and 2 is better than 3. So that also takes away a lot of pressure from the manager that I cannot buy a sell stock, right? But 3 rated, if I know that relatively it's going to do better, so I'm giving that leeway to the manager also. So that's how it is. And the whole overall, the team is around 12 odd people who are into investments and
on the investing side, and of course a much larger team. Otherwise,
we have 62 people in India.
Okay, and hiring,
but in sales and all.
And sales.
And maybe someday more research guys when we go into mid-cap fund, small-cap fund right now.
You've been, as you called it, on a Bharat Darshan trip. What's the feedback like, and it's always interesting to travel and meet people, and
So you were there yesterday. We saw the response. Hopefully it'll be good. But more than the thing is the wealth creation in the country has been enormous, number one. Second is the traveling via trains and via planes has become very, very different from what, although I've been traveling a lot anyway because I always travel for research, but not so intensively. The intensive part is that you are still on schedule. That is what the intensive thing, other than tiring you a little bit. But that way the infrastructure is really different from what somebody else may think. And I did not experience it with this intensity. But it's brilliant that way. So it is a big, big delta from whatever time you may have started. And so other thing is that like in Surat we saw how many people are making how much money and what businesses and saris or whatever, and it was serious wealth creation in many of these places. Pune I saw everywhere more or less.
You always said that global.
That's the team at Helios Mutual Fund now. We've got to get used to, saying that. It's not just Helios Capital, but Helios Mutual Fund. An interesting conversation always with Samir. We'll get into a very short break. The Nifty and the Sensex have dipped into the red. The Nifty was flat. Now it's down close to about 30-odd points. Nifty Bank is down to 50 points. We'll get into a break. We'll come back and talk to Nimesh to find out what dealing rooms are saying in our segment, D Street Chatter.
Welcome back. Well, as we speak, the Nifty has taken a bit of a leg down, but it's been a good recovery from the day's low. No two ways about it. Axis Bank was leading the fight back. That's given up a little bit. ITC, that as well was a stock that had recovered from the day's low. That as well has given up a little bit. So both these two stocks should come up for you on the screen. But it's 3 p.m. and it's a good time to focus on D Street Chatter. Nimesh joins us to tell us what is he picking up in terms of dealing room news. Nimesh, everyone's buzzing with excitement for tomorrow, but for the time being, you at least tell us what are you picking up in terms of dealing rooms.
And Nigel, as you rightly pointed out, good intraday recovery from the lows. But again, the global cues are quite weak. There is a clear risk off globally as well. And even in terms of flows today, the feedback is there is a basket selling at a leading FIDs, largely in the Nifty name. So that probably we'll see in the last half an hour of trade. The sector which is pulling the markets down is technology. And within that, I guess the cut-off guidance has really not gone well with the investors. So some bit of selling as well from the larger FIs. But I guess for the next week, the big trigger to watch would be the bank results. And we'll have HDFC Bank reporting on Monday. So that will set the tone for the Nifty Bank and in general for the banking sector stock. So that is something to track going forward next week. The good part is that while the Nifty is been under pressure, there is a good of momentum in the broader market. So that outperformance continue. And even in today's sale, there are a lot of pockets of stocks which have done very well in the broader market. So net a bit recovery from the lows, but the supply seems to be continuing in the FIs and net sellers.
What about stocks? Just yesterday you were telling us that you had so many stocks, you were spoiled for choice. What about today?
Well, that's not the case today. I've barely managed to get 4 chatters, so to speak. But I'll start with the first one. I spoke about few bank stocks which are under pressure on the back of the downgrade. But IndusInd Bank stands out within the private names, and that's buzzing in trade, good 2% and good volumes as well. A specific reason for IndusInd Bank to do well today, I guess the street is looking forward to the September quarter, shareholding pattern. If there is a dip of FI holding of more than 1%, there is a very high chance that it will get added to the MSCI index in the November review, and hence we're seeing a bit of action in that stock in today's trade. So that's the first one. The second stock is Shami Hotels. For the third day running, the feedback is there is an institutional interest in that particular stock, and there is the dividend-based buying coming in from larger FIs into Shami Hotels. It's a recent listing, so that's something to track there. The third one is Shalby. Again, for the last couple of days, big move in that stock as well, and the volumes have generally picked up. I understand some HNI interest seems to be back in this particular stock, and also the street is expecting some sort of a corporate development in Shalby very soon. So that's the reason why that stock is buzzing off late. And the last one is NBCC. This is all part of the whole PSU basket. You'll see 1 or 2 days some stocks doing well. For the last couple of days, some bit of HNI interest seems to be back, and the dividend volumes are quite high. And again, NBCC is buzzing off late, largely on back of buy flows at HNI desk.
Oh, thank you very much for that. The International Olympic Committee's most powerful body is currently meeting in India. The IOC session is the supreme decision-making body of the Olympic movement, and they're here to announce their key decision. Let's listen in.
Our foundation is already active. The potential is 7 million children, and this is, I think, quite an achievement, and I must say I'm really deeply impressed by these efforts. With regard to the decisions and works of the IOC Executive Board, allow me just to give some examples, because we had so many really far-reaching and important topics. The first one is about safeguarding, which is one of our most important challenges, because safeguarding is about the future of sport. If we cannot offer the children a safe environment to play sports, the parents will not send them anymore to sports. It is so easy, and therefore the IOC has taken safeguarding as a special focus on their work in the follow-up of Olympic Agenda 2020+5. We have allocated there a special fund of $10 million per Olympiad, means every 4 years. And we have taken up the request of the international federations to take the lead on addressing this critical challenge. This has been in the hand of a safeguarding working group chaired by the IOC Executive Board member Prince Faisal, and supported by our administration, by Mrs. Kirsty Burrows and her team, who is with us here on this podium. Recognizing the fact that with these safeguarding efforts, we have to get as close as possible to the affected people. The working group chose a bottom-up approach and recommended the establishment of regional safeguarding hubs. There the IOC Executive Board approved as a kind of pilot projects 2 regional safeguarding hubs in Southern Africa and the Pacific Islands, and to support the initial work for a European safeguarding hub. These hubs will provide the athletes with independent guidance, psychosocial support, legal aid, and any other help that they may need, and they will do so through existing services available locally in the athlete's own language, within an understanding of their culture and the local context. The establishment of these pilot hubs will be overseen by an international safe sport task force that will include representatives from sport, intergovernmental organizations, non-governmental organizations, civil society, and of course athletes. We got an update from the future host commission for the Olympic Games because we asked the future host commission for the Winter Games to evaluate the future allocation of Winter Games following 2 main criteria. The one that for sustainability reasons, a future Olympic Winter Games host should have a target of using only existing or temporary venues. Second, proposed snow competition venues should be climate reliable until at least mid of this century. Following these 2 criteria, there were 2 studies commissioned by the Commission. One, to identify the national Olympic committees with the most existing IF homologated venues, and another study to check if these existing IF homologated venues would be climate reliable until at least the middle of this century. Today, the future host commission for the Olympic Winter Games presented the first results of these studies. There are 15 national Olympic committees on 3 continents that have at least 80% of existing venues, which means that they have at least 9 out of the 11 required venues for snow sports. 10 out of these 15 have either recently hosted the Games or are interested to host the Games in the future. By 2040, so for Olympic, in Olympic terms tomorrow, 2 of these 15 NOCs will no longer have the necessary reliability for the Olympic Winter Games held in February, and 5 even for the Paralympic Games held in March. That means that by 2040 there remain practically just 10 national Olympic committees who could host these snow events of Olympic Winter Games. And from these numbers, it becomes even clearer that we need to address very quickly this dramatic impact of climate change on winter sport and the Winter Games. The future host commission has already started to address this very concerning situation. This implies deliberations on a rotation system, the composition of the program, the different needs for sports on ice and snow, and many others. And from all of this, you can already see that this is a very complex issue. And we need some more time to address this properly. This cannot be done in the next 6 months or even in the next 12 months. And this is one of the reasons, if not the main reason, why the Future Host Commission is proposing to get the opportunity to propose a double allocation of 2 successive Olympic Winter Games for 2030 and 2034, if all conditions are met, in order to gain this more time to address the dramatic impact of climate change. The IOC-EB gave, following this request, a green light to the Future Host Commission to pursue such a double allocation, and will put this question for further discussion to the IOC session here in Mumbai. The timeline for the further process is that the Future Host Commission to propose to the Executive Board by end of October, November this year to open a targeted dialogue. The IOC-EB then to decide in November about this targeted dialogue with a view to have the election of the host or the hosts at the IOC session in 2024. With regard to the sports program of Los Angeles 28, the IOC had to take 3 different decisions. First, it was about the proposal of the Los Angeles Organizing Committee to introduce 5 new sports, and these 5 sports are baseball, softball, flag football, lacrosse sixes, squash, and cricket. These proposals have been accepted as a package by the IOC Executive Board, taking into consideration that these proposals and these sports are fully in line with the sports culture of our host in 28, with the American sports culture. They will showcase iconic American sports to the world, while bringing at the same time international sports to the United States. The inclusion will, on the other hand, allow the Olympic movement to engage with new athletes and fan communities in the US and globally. The IOC-EB also reviewed the status of the 3 sports that were not part of the initial sports program for LA 2028. With regard to boxing, we are in a situation that after the withdrawal of the recognition of the International Boxing Association, the IOC has no international federation to partner up with regard to the organization of an Olympic tournament, because, at least at this stage, the IOC has not recognized any other governing body for Olympic boxing. Therefore, any decision of the inclusion of boxing in the sports program is put on hold. But I do not get tired to repeat that we want a boxing on the program. We have no problem with boxing. We have no problem with the boxers. We have just a huge problem with regard to the governing body. With regard to modern pentathlon, the IOC recommended to the session to include modern pentathlon, acknowledging the replacement of equestrian with obstacle racing and the optimization work conducted by the International Modern Pentathlon Union to reduce costs and complexity and to facilitate access to the sport. There is also worth noting, and to make this clear for all concerned and all interested, without the exchange of riding against obstacle racing, the sport would not have been included in the program. With regard to weightlifting, the Executive Board recommends to the session the inclusion, following the decision of the International Weightlifting Federation to delegate its anti-doping management to the International Testing Agency and its sanctioning to the Court of Arbitration for Sport at least until the end of year 2028. And we could see their really robust anti-doping program in place addressing our concerns. All these proposals will now go to the IOC session here in Mumbai for a vote. Finally, we looked at the discipline program. There are various opportunities to reduce the cost and complexity of the sports program at the Olympic Games were taken into consideration and highlighted. To give you one example, we received the request by international federations to add 16 new disciplines to the program. These 16 disciplines were evaluated under 3 criteria: whether they require a new venue, whether they require quota increases, whether they are a replacement of existing disciplines or events. And as a result of this evaluation, just one of these 16 requests could be accepted, and this is beach sprint rowing, which will replace the lightweight double sculls event. So far for some of the major decisions, and of course I'm happy at least to try to answer any question you may have.
Thank you very much, President. So a lot of content there to chew over. Happy to take your questions. I think I can see many people busy typing their stories, their first stories. So let's start with Wakako. Wakako in the front here, yeah. And then we'll go to Alex.
Okay, that's big news coming in, and you heard it right here on CNBC-TV18 first. That news break is confirmed. That's something that the IOC chief had discussed with Shireen in an interview just a couple of weeks back, the prospects of including cricket in the Olympics. And now I think LA 2028 is when we're looking at that inclusion happen. And good timing. Absolutely. Cricket World Cup is on. Cricket gets added to the Olympics.
And this is going to be the T20 format.
T20. That is what they're talking about. All right, quick break right now. We will come back with the market close in just a bit. Well, as we're getting set for the close, it is weak. There's no denying that. I mean, look at the sell-off on the bank nifty. It really accelerated in the last 10-15 minutes. And the net result is about a 0.3% dip on the nifty. The bank nifty is down about 0.8%. And in all probability, with this move, the nifty may have just wiped off the gains for the week. Well, no, actually, it's still about 0.4% higher. The bank nifty is negative for the week.
Yeah, 19,653. That's where we started off the week. And that's, in fact, we're ending a little above that. So that's pretty good news. What did well today then? Let's quickly tell you. We had a couple of those big names that did well. HCL Tech, that was the big winner. You had Tata Motors as well. That was up 4.5%. IndusInd Bank as well, up 2.5%. And Nestle was up 2%. On the flip side, you had Axis Bank that was under some pressure. And Adani Enterprises as well as Infosys. A few of them were...
That's Dinshaw Irani all smiles as he gets ready to, ring the closing bell there with Sameer Arora. Helios Capital now
they're looking
has
quite eager to...
I think
they're all
with
set,
those
guys.
Hammers, they're ready for the gong. I think Prashant is somewhere. I hope Prashant is going to wear a helmet and just stay safe, I think there's a lot of excitement there at the Bombay Stock Exchange with the top team at Helios.
But they're known to have fun, right? And they're having fun even right now. So... 1 minute to go, waiting for them to close the bell. And just to quickly take you through some of the other movers in today's trade. On the way down, Axis Bank is now the top nifty loser, 2.5% lower. State Bank of India down 1.7% as both these two get downgraded by UBS. Infosys also weak in trade. So at a time when HCL Tech closed up with strength, Infosys posts the guidance cut under pressure. Wipro ahead of numbers next week, lost 1.5%. LTI Mindtree too. So mixed bag coming in from the IT pack. Mid-cap end of trade, Paytm down 3%, IOB down 2.5%, Bandhan Bank sold off quite a bit. And then you had names like a Texmaco, ITI, Jaycorp, Ircon, Zaggle, BGR Energy, which made it to the gainers list, and all of them moving up on pretty large volumes. Well, they're staring at that timer.
Yeah, just two stocks, Rima, I want to highlight. Bandhan Bank was under some pressure, ends at the low point, and Dalmia Bharat as well, ends at the low point of the day.
So the first stick on the Nifty was in the red. Just at 2:30, we thought maybe the markets will attempt to rebound, close up in the green. But the last hour sell-off has taken the markets lower, 60 points down on the Nifty, and the Sensex ending with a cut of 170 points. That's the Helios team ringing the closing bell, getting excited as they launch their mutual fund.
All right. Well, with that, it's a wrap on this edition of Closing Bell. Many thanks for being with us. It's a goodbye from the entire team that puts this show together. But do stay tuned. There's lots more coming up. Coming up next, we have the next edition of Smart Money right after this break.